If you do not long today, I don't know what the hell you're doing. I'm gonna show you guys why I took a long trade today and exactly my confluences for this trade. Number one, we have to zoom out and we'll look at the hourly and the 4 hours. The 9:30 opened right here, pretty much right below the previous day closing. So guys, when we're sitting around all-time highs like we did now, you have to understand that price likes to push a new all-time highs. If you look at the history of the stock market, you're gonna break all-time highs. Then what's gonna happen the next day? You're gonna break another all-time highs, and then that's kind of how it goes. The market overall always goes up, so you do not need to be scared of like, oh my god, it's all-time highs. I got a short, we just broke all-time highs. It's not anything crazy. Breaking all-time highs is actually kind of normal. So going to the market open, I fibbed out my last leg higher, which was from this low Friday to here. And notice the pre-market pretty much bottom out on this hourly golden pocket right here. We also had a 1 hour fair value gap. This kind of added to my confluences. Now looking up and looking above, I noticed we did have a 1 hour bearish gap there. And that's kind of roughly where I entered once we had broken above it. Now the 5 minute we opened up with some strength. I have a yes on the side as well. We opened up the 5 minute with some strength. So right here, this was our hourly fair value gap. You see this 9:30 candle breaks above it, but more importantly, it doesn't just break above it. It creates displacement. Displacement comes in the form of this fair value gap right here, this 5 minute gap. And actually, I thought to just long this. But when I decided to wait for some confirmation because we had a 1 minute bearish gap right above us, and we did have a really small bearish SMT with ES. So once we broke above and we closed above this inversion fair value gap, it's telling me two things. One, order flow is still bullish because why? The 1 hour bearish gap got disrespected, and now the 1 minute bearish gaps are getting disrespected. This is telling me bearish levels are not being effective. Bearish levels are not protecting price, and in the bullish levels they're all getting respected. 5 minute gap, 1 minute gaps, that golden pocket is still sitting at our bottom. I believe we also maybe did have an SMT. I don't remember if we had an SMT overnight or we didn't. Yes, we did right here. Right where the golden pocket was at, as you guys can see right here, we had this SMT. And if I pull up ES, you see this low right here got respected. So again, another reason, if this is my SMT low, we should not come back down to those lows. We have a clear target, which is again the all-time highs level. So I pretty much just entered and targeted those all-time highs. I even targeted a little bit further. I thought we could get 24.9, and as you can see, we're all the way up to 24.930. But the all-time highs was the level where I pretty much took most of my profit and just let some runners run. Now, a lot of people were like, I told you how you trail stop loss because I did hold this pullback and then cut the rest of the move up. The way I'm looking to I have my trailing stop loss. I'm looking where is the last level that I want to see respected, if in this case it's a bullish trend or a bearish trend. As I'm looking at this 1 minute chart, there's not really anything going on here other than these equal highs. We have this 1 minute gap here, and the reason why I like this 1 minute gap right here is it's also sitting on this 5 minutes. So if we zoom it out, we have a 5 minute and a 1 minute gap together, which means more than likely that 1 minute should be held up. As you can see, we actually do tap into the 5 minute as well on this low right here, and that was the bottom of our 5 minute candle, and then we kept rocketing up. Also, another added confluence that I was looking for is you see here we have equal highs, and we actually have a third equal highs with all-time highs. So when price sets equal highs, there's a really high chance that we want to target those and take out all the liquidity that's sitting above it. So we had when we first rejected these two spots here, you have to imagine there's a lot of people that shorted the all-time highs, whether it's right now in today's session or that were short from anywhere the day before, overnight, and guess where they're putting their stop losses? They're putting their stop losses right above the all-time highs. They're like, okay, as long as the all-time highs doesn't get broken, this should continue down. But you can see as soon as we break it, we kind of have this really strong push higher. So that's what I'm looking at when I'm looking like where do I want to trail my stop loss. Now after we tap this and we make a new move higher, my new trailing stop loss would become this 5 minute gap right here. So this will be my next level. It's like, hey, if price pulls back, I want to see this level being held up, and as long as it's been held up, it's good. Another other confluence you could look for is right here on this yellow dotted line where you see price bouncing. This is the previous day closing price. That means that the daily candle has flipped green. And it's usually a key level that bulls and bears want to fight because they want to understand, is this daily going to be green? Is this daily going to be red? So as you can see, it was a little bit of a point of rejection even in the overnight session. And as soon as we flipped it, we held it up, and it was an area that we were bouncing on as well on the 5-minute. That's why it's so important to wait for your 5-minute candle closes. I always tell you guys this. I tell you guys this in every video. I always wait when I'm taking my trades for candle closes because the wicks are there to take out stops. The wicks are there, I don't want to say to confuse you, but to manipulate a lot of times. They'll manipulate, and the bodies is actually what's telling you the true price action, where the price really wants to go. Now, always do keep your wicks on the charts. Don't trade with charts with no wicks because they're important to know, but that's usually the way I'll look at it. And if you look at price on like a larger time frame, so if you look at this overnight session, we can see that this wicks here was where the manipulation was, where that golden pocket move was. So that's where you hit, where you have it, and then the real push, comes in later. Again, you're in a really nice, healthy trend, and the trend always comes with a push higher. So we call it distribution. So here we got a distribution. Here we got an accumulation. Here we got our small manipulation leg, and then guess what we're going to? We're going into another distribution leg, right? When the price is this strong, you don't want to fight it. You can look for reversals, like you could say my trade maybe was a reversal, but the real trend is really bullish right now. So my reversal is just me waiting for an optimal time to find an entry and then capitalize on the entry, find long, and then keep pushing higher. And guys, it always goes back to the same confluences, and I can't stress it enough. Right now for you guys one more time. If you're not using these confluences, I don't know how else you're trading. Fair value gaps, golden pocket, SMTs, you can see I've used it, and understanding simple liquidity levels. Guys, again, like the all-time highs was a simple liquidity level. Another mistake that I saw some of my students make today is whenever we trail the stop, they trail their stops under 1 minute liquidity. So here, for example, we have this 1 minute equal lows. Right, that's sitting right above that gap. What price loves to do, and what market makers love to do, if we want to go higher, they'll come and they'll take out the latest 1 minute liquidity, tap into a gap to rebalance that gap, and then they'll continue to trend. So you never want to put your stop losses right under lows like this, because more often than not, you get stopped out and then price reverses. If you're going to have your stop loss like that, just trail it aggressively where you're happy with the price, or trail it under a fair value gap. This is why every time you see me trail it, I rarely trail under lows and highs because it's liquidity and price likes to hunt that. While I'm really trailing it under fair value gaps, fair value gap fills, golden pockets, because the golden pocket should be held up because it wants to continue to trend. Fair value gap will get tapped into, it will get rebalanced, and after the rebalance, then we'll keep pushing on price. But I rarely ever set it under liquidity, which is what you're doing if you're setting your stop losses under lows. So I hope this video helped. I hope this recaps helped. If they do, if you want to work with me one-on-one and be one of the students that catch trades like me, like this, every single day, the first link will be down. And if you want to see more recaps and just more simple, quick videos like this, leave a like, subscribe, and I'll see you guys in the next video.